What's up, everyone? Hope you are having a fantastic week. My name is Mitch Piper. I'm the National Membership Director of the American Society of Tax Problem Solvers, and I want to welcome you to today's presentation where we're going to be talking in depth about non-filers. So making his 2019 webinar debut is Jeffrey Schneider from down in Southern Florida. Jeff is an enrolled agent, a certified tax resolution specialist, and an NTPI fellow. In addition to speaking at a few of our webinars last year, he has spoken at live events all around the country, including our very own Super Conference last fall, and we're certainly happy to have him back. We are doing today's webinar thanks to our friends over at Call in Queue. So if you are waiting for more than 3 minutes to get through to the IRS, then something's wrong. You no longer have to plan your day around IRS phone calls, because in queue can actually get you through in 3 minutes or less, and they're guaranteeing that now apparently. So you might be saying to yourself, Mitch, lately some of the IRS lines haven't been too bad, but the reality is if you're spending 10 minutes to connect on an IRS phone call, I mean, if you do the math, if you're making 5 or 6 calls a week by using in queue, 10 minutes doesn't seem that long, but if you're using in queue, you're going to probably save close to 45 minutes or an hour a week. And if you take those same numbers and spread them out over the course of the year, you're going to see how you could save hours of time using this pretty inexpensive service that's available to you now. So call in queue/ASTPS, and you can try it out for $20. You'll get 200 minutes of time, which I guess that's good enough for about 10 calls. And you can try it out and see if you like it. Hundreds of our members are currently using InQ. We use it in our CPA firm. It's a great product, great service. And if you still have absolutely no idea the name of the company I'm saying, I give Andrew Valiente a hard time about this all the time because nobody ever understands what I'm saying. Just go to the handout section of GoToWebinar and you can check out handout number 2, and that'll give you all the details about his service and how you can get started, try it out. So housekeeping. So if you'd like credit for today's presentation, you must be logged in for 50 minutes for 1 hour and 100 minutes for 2 hours. If you're listening on the phone, you're not going to be able to get credit unless you are logged in using the app. GoToWebinar has a pretty cool app. So if you're ever traveling and or on the road or something and you want to listen in, it's a pretty cool. We tried it out a couple weeks ago. It works pretty well. But if you're just on your desk phone, you just have to be logged into the computer. You should be able to see Jeff's slides. That way you can answer the polling questions. So speaking of polling questions, there will be 6 of them. And please, we'll announce them, and we're going to give you a minute to answer them. That's plenty of time. And if you're at your computer, you're definitely 1 minute. They're not difficult questions. You're definitely going to understand and get them. But please don't email the answers to us, because there's literally over 2,000 people registered for this webinar, and there's only one of me. So it's going to be very difficult for me to get everything matched up, and it's very time consuming. So please just answer it in the program. Speaking of CE credits, please don't call and yell at us, especially Carolyn. If you want to call and yell at me because you didn't get your 1 hour of credit because you missed a polling question or something, that's fine. But please don't yell at Carolyn. She's like afraid to answer the phone sometimes because people are acting all crazy over 1 hour of credit. So yeah, if you miss a question, we're doing 20 webinars a year. So and this is number 10, so we still have 10 more this year. So if something happens and you miss a question, there's really nothing we can do, and it's not our policy, it's the IRS and NASBA. So just get them next time. Enjoy the class. You're going to learn a lot. The CE is really just a bonus anyway. The content is I mean, it's free, but it's worth quite a bit more than free. So if you'd like to ask a question, we're going to try and possibly go over a couple along the way. If I see a lot of the same questions, I'll stop Jeff and we can go over those, or potentially when we're asking a polling question. Other than that, they're going to be pretty much at the end. Please save yourself the time. We're not going to be able to answer any specific case questions. If you have a question that you think is going to be relevant and helpful to the entire class, then we'll be able to try and squeeze a couple of those in at the end if we have time. The certificates, we're going to send those out tomorrow, probably tomorrow morning. You should look for those in your email. We'll also submit any credits that we need to the IRS for if you gave us your PTIN number. And since this is a 2-hour presentation, the thing we've been doing lately is we'll take like a 5-minute break around 2 o'clock. So it'll probably be either 1:50 or 1:55, and we'll obviously announce it, and then we'll do a polling question, and then we'll take a quick break. And as far as event news, the gang is down in New York City right now at the Sold Out Boot Camp, just outside of Manhattan. So we're a little short staffed. So if you have any questions for me or you have about any of our programs or stuff, just make sure you wait till after the presentation's over so I can talk with you on that. We're about halfway through the year as far as boot camp go. So we have, I think we have 4 left. Our next one's Niagara Falls. Really excited about that. Obviously, I've been talking about it for a couple months now. I'm excited. People coming from all over the country. A couple of our neighbors from Canada are coming down for it. So excited to show everybody around and have a good time. And obviously, it's a great course. You'll learn a ton. So still a couple spots left for that if you're interested. And I'm also going to talk about the boot camp and some of our other courses at the end of the presentation today after Jeff's done. So if you want to stick around after that, we can you can hear more about our programs. But that's all from me. Jeff, are you ready to get started?
I'm ready.
All right, let's do it.
All right, great. And good afternoon or good morning, depending upon where you are. It is about 1 o'clock Eastern time. As Mitch said, I have been a member of ASTPS. I'm a CTRS, Certified Tax Resolution Specialist. So if you're doing resolution work, I suggest you do that. Take that exam and add that to your credentials. I was asked to do this for NTPI about 5 or 6 years ago, and then I keep upgrading it and so on, but it seems to be one of the most popular ones that I do. I just did this for the California Society Super Seminars. So we're going to talk about some of the things that you need to know when you're representing a client who's a non-filer. Let's see, where is my mouse go? There it goes. All right, so what we're going to talk about, the objectives are, we're going to define what is a non-filer, and then there's real world and IRS definitions. We're going to talk about what are the IRS processes and what are some of the remedies we can go about representing these clients. And what can the taxpayer representative do to mitigate the issues facing a non-filer? And there are going to be some other items at the end we're going to briefly talk about. So now, like I said, we're going to talk about what is the definition of a non-filer. And like I said, there are basically 2 sets of definitions. One is real world and one is the IRS. So obviously we're going to talk about the IRS definition because that's really all they care about. And as you see, habitual. Habitual basically stands for they just don't file. There is no rhyme or reason for it. They just don't get around to it. It's just something that they don't do, and they may do a couple at a time, and then they go on. Skip, this is the one I was talking about. They may do a couple at a time. I had a cousin who used to do that. He used to get refunds. And when the interest rates were a lot higher now they're about 6%. I think they just dropped to 5% this quarter. But he just wouldn't file for 2 or 3 years. Then all of a sudden we'd file 2 or 3 years, and then he'd skip 2 or 3 years, and he'd always get refunds. He'd always send in his estimated tax payments. He was self-employed, and he'd always get a refund. He'd always pay in more. So he was not only not getting interest back, or getting some interest back, a small amount, but he was also giving the IRS free money. So there's no reason why, but he just did. And then there's the stop filers. This seems to be the biggest part of my practice, that they would file, and then all of a sudden stop. There's a lot of reasons for that, and I'm sure you've seen that in your practice. The biggest one is 1 year they owed a lot of money for whatever reason. They took an IRA distribution, they sold some property, and they didn't have the cash, especially if it was a retirement plan distribution. In 401ks, they take withholdings, but in IRAs, they don't always. So all of a sudden they take $50,000 out and say they owe 20%, that's 10 grand, and they spend it. And they get the tax bill when they get the tax return, and they don't pay it. And then the next year they feel they're going to owe again, and they don't pay, and it just snowballs. So that's called the stop filers. Now let's talk about real world. First one is procrastinators. They just never get around to it. I don't know about you, but procrastinator seems to be, my name of my company is SFS Tax and Accounting Services, or SFS Tax Problem Solutions. It should be SFS Helps Procrastinators. It's an unbelievable thing. that people just say, I want to do it. They sign the engagement letter, they give me a nice retainer, and then boom, all communication stops. They never get around to it, or, oh, I'll get to it over the weekend, or I'll do this. I don't know how many people are smiling. I know when I did this presentation in California, half the class, when I asked them how many here have that type of situation, out of about 180 people in that room, about 180 raised their hands. Uncooperative, if you see the underlined and bold in the last sentence, it says unopened envelopes. I had somebody come in this morning with 20 envelopes. It really should have been only got 10, but it was husband and wife, so they each get their own. We haven't received your return, or you still have a tax balance. And it's just an amazing how they get an envelope, and one person said to me point blank, if it's not certified, it's not important enough. So I said, okay, and which is actually true. If you don't get the certified letter, it is not the end of end all, but it's something you have to be aware of. And then tax protesters. I don't know about you. I've received maybe 3 people over the past 10 years come in and said, why don't you file? Well, we don't have to file, or it's against the Constitution. There was one argument that the commissioner should pay my tax for me, or I don't deal with that. The only thing I show them is the door. So I don't talk much about tax protesters. We all know that Code Section 61A says income is taxable from whatever source derived, and then you have to find the exception. Well, the exception is that it's not legal, it's not part of the code. So I don't even deal with that. You may, if you downloaded my PowerPoint, you'll see this IRM, these 3 basic 4 sections, 4.19.17 and 17.1, 5.18.1 and .2. That is the section in Internal Revenue Manual. I don't know how many people here actually have read any part of the manual, but it's a very important thing. You need to know this better than the revenue officer, the settlement officer, or even the revenue agent knows themselves. If you ever taken a class by L.G. Brooks, who is an instructor with ASTPS and other organizations, that's the first thing he says. I remember taking a class when I took my first ASTPS class. It was a boot camp on installment agreements. And he just lambasted all of us into that. When he would say about an IRM, a lot of us just looked dumbfounded. This was about 6-7 years ago. And I only knew it on the collection side, a little bit of it. But now it's saved on my desktop. I suggest you all do the same thing. Save the IRM to your desktop and actually read. These sections are on the collection side too. All right, so when you have a non-filer and the IRS says we haven't received a return, and they look at it, you may not realize that, but the IRS, when they see a lot of back returns, they're already doing stuff behind the scenes. And we'll talk about SFRs, a substitute for returns, later on, but they are doing this work. And sometimes you pull up transcripts. I don't know. I know Mitch mentioned Call NQ, best call program. I couldn't deal with do things without it. The other one is TaxHelp Software, which I know is a sponsor here sometimes. So when I pull up the transcripts and I'll see that returns haven't filed, there's nothing there. And when I first got into this really heavily about 10-15 years ago, I always asked that question. It's because when they looked at an SFR and they're showing a refund, they don't prepare it. The IRS is not going to issue refunds unless they're expecting to get some kind of tax back. I listened to a webinar yesterday of a buddy of mine, and he said, oh, if there's significant tax due, I disagree. I think there's any tax due. I'm not talking about $100, but they'll send an SFR, there's going to be some tax due. So how do they look at that? And how do they ascertain certain things? Well, obviously, they look at the occupation of the person. They look at returns that were previously filed, what they're doing. They look at information returns. We'll talk about that in a minute. They look at their banking information. If they made some interest, even if it's small, the IRS has that account number. They know what kind of banking that they do. They look at the age of the person, if they're young, if they're older, if they're retirement age. They look at where they're living. And a lot of these things are lifestyle audits, not an audit where you think they're walking up to knock on your door and say, we're here to audit you, or they give you a certified letter, but they look at where you live to see if you're living within your means. Again, they look at the last return information that you filed. They see if you're a delinquent filer. When did you file it? They look at your adjusted gross income. They look at the tax liability, as it says there, how the taxes were paid. If you paid it by estimates, did that change? Now, how many returns are delinquent? That's very important. They look about, again, if you're habitual. And they look at this also for penalty purposes. So, willful neglect, willful is a different penalty than just, oops, I filed it late. So they look at how many returns in the past were delinquent. And what else do they look at? There are many different things, and we should be using this in our own practice too. If we're doing, say, for example, offers in compromise or partial pay and installment agreements, you look at the tax assessor's office, see if there's any property. I knew about a client that had a business. They wanted to close the business. And next thing I know, there's another business in the same name and the same address. And obviously that's not a good thing. And when I confronted them about it, they actually straight up lied. And so I again showed them the door. But that's how I found it. I found out they owned property. They filed a property tax return. In Florida, we have tangible personal property tax. Some other states do too. The World Wide Web. A lot of times I'll do a Google search. Mr. Google helps me a lot to see about if there's anything on the web about that individual person. Same thing with business licenses, professional association, sales tax. That's very important to see if they file sales tax returns. The easiest one that everybody can look at, and the first thing you need to do when you file, and you can see that on slide 9, is you look at the W&I transcript. The IRS stopped the faxing of those, but they did decide not to continue with the, as they call it, unmasked or the redacted transcripts. You should be able to get full transcripts from eServices. Everybody should have an eServices account. Again, I use TaxHelp software, makes it a lot easier. And you will be able to get unredacted. In the past, when they said they were going to do, they were only going to give you redacted transcripts. The only unredacted you would get would be when the taxpayer was a non-filer for the year that they didn't file the return. They decided against that. And now, for example, I did two or three of these past week, and they were all unmasked. So everything seems to be accordingly. So that gives you a lot of information about when they should, if they filed. Now, if the IRS did issue a substitute for return, and there's nothing on the wage and investment transcript, it's some things you have to investigate. And that brings us to SFRs. It is statutory. A lot of the stuff we talk about with the IRM is not legal per se. It's not in the code. It's the IRS playbook, but the IRS preparing returns on behalf of the taxpayer is, and there's the code section, 6020B. Very specific that the IRS can prepare a return on behalf of the taxpayer. So what happens when an SFR is prepared? It is for collections only. It cannot be used in bankruptcy as a prepared return. So if you go, and we'll talk about bankruptcy later, but I'll just mention it now. When you file a bankruptcy petition, the first thing that the bankruptcy trustee wants to see, or the judge wants to see, is that you're compliant. Get all your returns in place, because they don't want to see that you're filing bankruptcy for whatever number of years it is, and then you have these 5 years that haven't been filed. So they want to make sure all returns are filed. Doesn't say get all tax returns prepared, tax payments paid, but just at least get the returns. But it is a return for collections, meaning the following. So we have to consider 3 things. It doesn't stop the penalties, so the penalties keep going. The failure to file, remember, it's 5%. A failure to file is 5% a month, up to 25%. Same thing with failure to pay. And it does start the 10-year statute. This is what I was saying about it's a return for collections only. We all should know that the 10-year collect, and we'll talk about statute of limitations in a little bit, but the collection statute is how long does the IRS have to collect the debt. Now, the date is very important. It's the date that the tax was assessed, not necessarily when you file the return. For example, if you file the return and then it gets audited, your return shows $1,000 tax due. Well, the 10-year collection statute starts at that point. But then if they audit you and they assess you more, you have a second CSED date. So those are some things you have to consider. There it is, the IRM 5.1.19.6.15. It says specifically that the revenue officer, revenue agent, usually revenue officer, cannot collect after that date. And I've had to quote that to several revenue officers, believe it or not, that they were collecting a tax that was more than 10 years past due. All right. They don't, remember, like I said, they don't always have to do it. It's permissive. That's the reason why they don't do it if there's a refund expected. I don't know this for fact, but I believe that's the reason why they said the IRS can create a substitute for return. If it was mandatory, then they'd have to start issuing out refunds. The IRS doesn't want to do that. They say, you don't want to file a return, we're not going to send you back your money. And it was held up in 1983's Fifth Circuit Court of Appeals. All right, so let's talk about a calculation of the CSET. Yes.
I'm going to interrupt you. I'm going to do the first poll.
Oh, okay.
So here you guys go. Get 1 minute to answer it. Yeah, and speaking of unfiled returns, it's so funny. We had the weirdest couple of days here at our CPA firm. So if for those of you who don't know, we also have our own tax resolution firm that we run in Buffalo, New York. And we're just like most of you guys. We have 9 employees and 2 CPAs and 3 EAs. And we've gotten like 10 or 11 appointments in the last like 2 days. It's been wild. We're not really doing anything different. It's just been crazy. So and almost every single one of them had unfiled returns. It was crazy. But for the gold members, that's going to be one of our upcoming marketing webinars that we're going to do, is talking about what's happened in the last couple of days. But yeah, every single one of them's had unfiled returns. It's pretty wild. All right, give you guys about 3 more seconds and we're closing it. And there you go. You keep going.
Well, it said 26% of you do not offer resolution work. So that means you must be just doing tax prep. I don't know about you, but I can't stand tax returns anymore. So you should go to these boot camps that ASTPS is offering, and then the Academy. As a matter of fact, I'll be going to the Academy in Fort Lauderdale this November. So it's a great profession. I love doing it. But let's talk about the practical side of a CSET. So here's an example. The IRS files an SFR for unfiled 2006 return owing $20,000, and they did it on January 15, 2009. So not considering extending the statute to file a return that adds tax. That's what I was mentioning before. You know, you can have multiple CSET dates. And extending the statute is another term for tolling the statute, meaning that if you had a bankruptcy, it extends the statute. If you had an OIC that was rejected, it extends the statute. So forget about doing that. Let's make this nice and easy. So the question is, what is the last day in which the IRS collect tax? Oops. Oh, there we go. So there's 10 years. So the date that they filed that return, remember the 2006 return was due April 15th of 2007, even if you extend it to October 2007, but they didn't actually file the SFR until January 15th, 2009. So that's 2 years, a little less, about 18 months later. So now your SFR extended the collection statute to January 15th of 19. Somebody always asks the question, when can the IRS file an SFR? Usually it's done between 2 and 6 years after the due date. On average, I've seen between 3 and 5. I've seen as far as 6, but I've never seen it really longer than that. But that is something that you be on the look out at, that if you have an unfiled returns due, best to see if there was SFRs prepared on behalf of the taxpayer. All right. After the 10 years, within a few days, it's not always exactly on the right date. Now, here's one thing. Let me backtrack 1 second. The date that I showed you here, for example, when you get a transcript and the IRS calculates when the CSED is and so on, and they're not always right. You need to be careful of the tolling dates, but I always give it about a week or two after the date that the tax was assessed for the actual tax to be written off. And that's what it says on the transcript. It says written off. And if they owe over this, and there's a lien on their account, whether a notice of federal tax lien or a statutory silent lien, you want to make sure that it gets removed because the lien is now unenforceable and you want it removed, withdrawn. So just make sure you take care of that. You look at the transcripts very carefully, and the last line, it says written off, and you have a 0. All right, so as we say, sometime taxes do die. Remember, there's nothing absolute except death and taxes. Well, for the most part, taxes do die sometime. All right, so let's talk about the actual substitute for return program. It is to secure voluntary income tax return for the taxpayer. It actually needs to make sure that the tax is paid. Remember, part of the Taxpayer Bill of Rights says that everybody should be paying their fair share. So by not filing a return, well, you're not reporting your fair share. So that's what the purpose of an SFR the program is. So now what? Well, the IRS starts sending out notices. Then what do? They send out more notices. Then what do? They send out more notices. The IRS kills more trees than anybody else. Now they have, or had, let's put it that way, the program's still there. It's called the Automated Substitute for Return module. And you can see the requirements there. It's basically not for the self-employed. Basically, the computer picks up W-2s, 1099, INTs, divs, so on. Income is usually less than 100,000, and it's automatically done. However, about 6 to 8 months ago, the IRS, and I don't understand the reasoning behind it, so I'm not even going to get into the logical lack thereof, but they suspended the program. They didn't cancel it. They suspended it for future considerations. Maybe it could be the computer systems weren't picking up the right numbers, or there was too many errors. I have no idea. But now, with all the shortfall of people, we know that the IRS's personnel is at its all-time low, even though we keep hearing they're hiring. But now less substitute for returns are actually being prepared because it has to be manually looked at. So that's not a bad thing, except eventually they may get around to it, and it could be 10 years later. And remember, the 10-year statute doesn't start until a return is prepared. And that, as you noticed, saw by my previous slide, I did 18 months. I say it could be done 2 to 6 years later, but who says it can't be later than that? So I don't know if that's a good thing. If they have people on the ball doing this stuff, or enough people hired to do it, they'll probably be better off. But this is the requirements of the Automated Substitute for Return program. All right, and again, it said it has been suspended, even though TIGTA, the Treasury Inspector General for Tax Administration, my mind just blank what the hell it stands for, recommended. It has also been pushed by Nina Olson, who was, I'm not sure what, I think her last date is July 31st, or was it June 30th? I don't remember. Nina Olson is the taxpayer, or was the taxpayer advocate. She has also pushed this. So it's just an interesting thing where everybody's saying it's a good program, and they decided to suspend it. All right, so what else? It's no older than 6 years prior to the current year. It's not an uncollectible status, because even if they do an SFR and the taxpayer's already in CNC, they're not going to get anything. They have to make sure that the taxpayer is living where they think they are. Now, a lot of non-filers, one thing I know for a fact, and most of the non-filers, they have moved more than one time since the last time they filed. That's why they keep saying, oh, I never got a notice. Well, because the IRS doesn't know you moved, you haven't filed. And that's where the IRS gets the change of addresses. The same thing like in corporate. If you file a corporate return, you have to check the box, change of address. So it's important for taxpayers to let the IRS know where they are for many reasons. There's the Form 8822s that and Bs to do change of addresses. But the IRS sometimes, and I'm going to use, you can't see me obviously, but I'm using air quotes, that they sometimes get back the envelope as undeliverable with that little yellow sticker that says address but unforwardable, because it's after a certain period of time. I think it's 6 months. And in theory, the IRS is supposed to take that information, verify with the USPS, and then put it into the system. So they have a current address for whatever reason they need a current address. Again, it doesn't always happen, but it's sometimes important that they do. So let's talk about a substitute for return and a statutory notice of delinquency. This is a case back in 17. Kevin and Ann Marie McDuff. Tax court ruled they did not have jurisdiction over it. And so what does this have to do with non-filers? Well, if you notice the second bullet there, it says parties agree that the SFR was never issued before the statute of notice of deficiency was issued. Generally, the tax court does not have jurisdiction unless a notice of deficiency or a tax was assessed. Since the notice of deficiency was never issued, they had a different filing status, so the tax court said I didn't have any jurisdiction, and it went to the Ninth Circuit. In Judge Page also said in the Ninth Circuit, in 1988, no income tax return needed to be filed in order for the commissioner to issue a valid notice of deficiency. And again, under 6020B, if there's a tax due and you don't answer it, either by correcting the return, and you can always file a corrected return. You don't always want to, and I'll get to that in a second, but you can always file a correct substitute for return. And if you don't, and you ignore it, the IRS and the commissioner can issue it a statutory notice of deficiency. So before we get into that, let me back check 1 second. All right, so let's talk about a substitute for return and what goes into a substitute for return. Let's just say you filed your last return in 2005, and you filed it on time. You filed a joint return with your wife. You had a 2-year-old and a 1-year-old, so you got a nice deduction, but you haven't filed since. So you didn't file your 7 return, or your 6 return, your 7 return, your 8 return, your 9 return. Then all of a sudden the IRS issues out a substitute for return for 2006, like that example I gave you. Well, they're not going to create a joint filing return. They use the worst filing status there is based on the information they have. So if they had the last information that you were married, they would do married filing separately. They will not give you head of household, even if you had spousal abandonment. They will not give you single, even if you got divorced in 2006. They would do married filing separately. You will not, and at that time, prior to Tax Cuts and Drawbacks, give you the exemption amount. They will not give you any child tax credit. They will not give you any earned income credit. Because remember, married filing separately, you're not entitled to the earned income credit anyway. So even if you were single, you wouldn't get any of the credit. So it's a bare bone return, no itemized deduction, straight standard deduction. And it's the worst way you can file, for the most part, you can file a tax return. So now, do you want to file a corrected return? Well, if you're doing an offer and compromise, it really doesn't make a difference. Remember, an SFR is good for collection. So if you do an offer based on that number, what's the difference? But if you're doing an installment agreement, then you may want to drop the tax, because obviously it drops the payments, whether it's a PPIA or a straight installment agreement. So it all depends. You have to just look at and do the analysis. So let's talk about statutes of limitations. There's the 3 years, and you see the code sections there. There's 3 years from a time we filed a return when you can actually get your refund, or when they can audit you. So those are the different code sections. There are different sections related to timely file returns, or you filed early, and late returns. So the assessments is the statute of limitation begins the day after a return is considered as filed. And remember, timely filed or timely mailed is timely filed, and that has been upheld by the courts. So if you mail the return, say today, which is July 11th, I think, right? July 11th, the return is then begins tomorrow, July 12th, and it's 3 years. So it'll be July 12th, 2022. On collections, it begins to run the day after the tax is assessed. That's different than when the tax return is filed. Now, you can request what's called a tax, or T actually, we call it tax mod A. You can't get that from e-services, so tax help software, Canopy, Pitbull, wherever one you use. You can't get it there. It's also very hard if you call PPS. Now, PPS doesn't always, they say, because it's a different computer screen, and they don't want to always go in and out of different modules. But you can get it to them if you don't call them back. And if you use call NQ, it should be on hold less than 3 minutes, and it's a piece of cake. They always used to fax it to me. It was never a problem once I got a revenue officer from PPS who knew what they were doing and knew what a tax mod A was. And they would fax it to me. The issue has been asked, and I've seen this in the last, some of the Facebook, I don't have any Facebook friends except us tax people. And that was the big question. And with the lack of faxing, will the IRS or PPS actually fax a tax mod A? They said they won't fax transcripts. So this is not a true transcript. So I don't know what the answer to that is. But though you can get to do a FOIA request, or a FOIA request sometimes takes longer. I don't know why the IRS would not put the tax mod A into your e-services mailbox. But that's just something you may want to consider, but it's definitely not through the standard operating procedure for pulling transcripts. But the tax mod A is usually a better calculator of all the different statute of limitations. Now there's a 6-year statute. All right, now we're talking about material misstatement. Now you notice we're under-reporting of income greater than 25%, the SOL is extended by 3 years, and there's the code section 6501E1A. But you notice what it says there. It says under-reporting of income. It does not say anything about over-reporting expenses. Now that can get into fraud, and we'll talk about that as we go on. But the under-reporting of income is the important thing. They want to make sure you report your income correctly, as opposed to, I guess, as expenses if you go do an oops. Now, if you notice, there was a United States Supreme Court ruling that was overruled by this new section, Public Law 114-41 in 2015. Cost basis, because remember, they talk about under-reporting, and that's gross income. When you show net profit of a sale of an investment, real estate, whatever the case may be, what is actually reported under the income section of your 1040? It is your net income. So the net income is part of your overall total income, and that's what they look at for the understatement. So if you over-report your basis, you are under-reporting your income. Thus, that can also lead to this type of extension of the for 3 years of the statute of limitations. So just be aware of that it's also basis. It comes into play here. So now they look, when you have this section, if you have just a 3 year and you do an oops, you missed a 1099 for about $400, they're not going to go crazy on you because it's an oops. But you have to consider, was it a willful attempt to evade the tax? And then also they start looking now if it's fraud. If you start doing this, and if you've done this more than one time, they look at it as willful aiding and abetting the filing of fraudulent tax returns. That's where a lot of tax preparers get their preparer penalties, and then they get their license taken away. Even if you're not a CPA, enrolled agent, or an attorney, you can lose your PTIN if you're an unenrolled preparer. So that's something that's you need to be aware of. And then they actually look at straight out fraud. And it's not going for fraud. It's not the easiest thing in the world. It's not something where a revenue agent or revenue officer goes, I think it's fraud, let's go. It doesn't work that way. But we'll get to that in a little bit. There is no statute of limitation on a fraudulent return, because if a return is deemed fraudulent, it's not deemed to be a return. And we'll talk about what is the determination of a return in a little bit. But there is no statute of limitations on a fraudulent return. And then no extension is filed. If return is filed on or before the due date, the statute of limitation is 3 of the 6 years from the due date of the return, not when filed or when received. So if you file a return March 1st, the statute of limitation still goes to April 15th. So that's very important. So the collection statute also is to April 15th. So it's 10 years from April 15th, not March 1st. for example. All right, so timely filed extension, and again, it's when received. So it's filed after the due date. It's when it's received by the IRS, but not later than the extended due date. So it's basically you get it when it's filed, but no earlier than April 15th. All right, there is no statute of limitations. Again, if a return has to be filed for the statute of limitations to start the clock to start running. And again, a lot of these things can be extended depending upon, especially the 10-year statute, depending upon the tolling statute. We talked about that. Following an OIC and getting it rejected, installment agreement, defaulting on installment agreement, following a bankruptcy while it's in bankruptcy procedures. Then it's not just, there's certain days, like for example, at OIC, the toll in the clock stops while it's in the OIC unit. If it's rejected, the clock starts again, but it adds 30 days, for example. So there are other things besides just the stop and go related to this. All right, so then there's the 10 years. Just as a point of information, prior to 1990 it was 6 years, but this is the 10-year statute for collections. Then there's 20.
Jeff.
Yes, doing polling?
Yeah, let me just interrupt you for a second.
Sure.
All right, so we give you guys about 1 minute here to answer it, and then we are going to keep rolling. And again, we're going to take a break, 5-minute break, whenever we find a good spot, probably around between 1:50 and 1:55. This is a 2-hour presentation, so if you want to get the 2 hours of credit, just got to be in here for 100 minutes. Yes, this is the second polling question.
It's very interesting that so far 36% said they've never had a client that was a non-filer. That to me is an amazing statistic, that nobody's, those 36%, so that's roughly about 450 people have never had somebody come into them with more than one return due. That's considered a non-filer, even if it's 2 years. Doesn't have to be 5, 6, 7 years in a row.
All right, we'll give you 3 more seconds, last chance. And keep going.
All right. So again, the 20-year statute, what this means is that if you get a court-ordered judgment, meaning you go to court and the tax court says you owe this money, the statute of limitation is 20 years from the judgment date. Now, if, for example, your return was filed, remember I told you can have multiple statutes, collection statutes. So if you had a return filed and you owe $10,000, well, let's just do big numbers, $100,000, the collection statute starts at the time that the tax was assessed. Then the judge says, no, 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 you owe $200,000. You may have a second collection, but that's 20 years. So you try not to have a judge tell you that you owe any money. All right, so this is important, folks. This definition has been given by the courts. It's called the Beard case, and it has been, this was 1986, but then there's another case called the Reifler case that was a tax court memo. And there's memos, there's opinions, and there's summary opinions. In the order of precedence, summary opinions are the lowest, memos, and then opinions in reverse order. But in this case, in the Sixth Circuit, 1986 Beard, and it's a very important case, defines what is a return for purposes of filing. So we're going to go into those pieces. So what is a return? The first one says sufficient data to calculate a tax liability. In other words, you can't just put zeros on a return and then put a tax at the bottom. There's no data on it. You have to make sure there's, and it may sound facetious, but there's one question in the tax court exam that asks that very, very important question. If you put all zeros on a return, is it a return? And the answer is no. All right, document must purport to be returned. Now, this is something that changed about for the software companies. I use ATX. I don't know how to use ATX. But back in the old days, probably before 2007, 8, something like that, it was an Excel, actually before Wolters Kluwer bought it out, Commerce Clearinghouse. It was an Excel-based C-driven program, which means you can unprotect the return and type in certain information on the return. Now they have a lot of areas that you can just check it off and the program will put it in there for you. But back in the day, you had to enter it yourself. The IRS made them stop that 1 year or something. I couldn't do it anymore. And they said, well, the IRS is stopping it. Well, here's the reason why. When you manually change your return in a software, it's not deemed to be a return anymore. So they stopped the software companies from allowing you to do that. An honest and reasonable attempt to satisfy the requirement of the tax law. First 3 words, honest and reasonable. Doesn't mean it has to be right. Doesn't say it has to be 100% perfect, because not every return, especially self-prepared returns, are 100% perfect. Preparers, professionals make mistakes. But as long as you did an honest effort, oops, I forgot to, like in ATX, for example, you have to check off what form a 1099 belongs to. A miscellaneous, you have to put it to line 21, or do you have to put it to an actual Schedule C? Which Schedule C, even though it says spouse? You have to check it. If you don't physically check it, it doesn't carry forward, though you entered into the program. And if you weren't diligent and looked it over, if you're rushing, it's an oops. It's not a willful attempt to evade tax, but it is an honest and reasonable attempt. So the return is a good return. You just may get a CP 2000. And taxpayer must execute the returns on the penalties of perjury. Not only do the taxpayers sign it, of course, we have to sign it as well, best to our ability. The information reported on the return is complete and accurate. All right, and this is again the rifle case. It was a unsigned return, and they deemed it to be a fraud return. We mailed it, we sent them our check or whatever the case may be, and they said no, you have to actually sign it under penalties of perjury. So, all right, so let's talk about the non-filer program. Mitch, do you want to take a break now before I get into this the whole next section?
Yeah, we can. Yeah, we can do it right now.
Yeah, let's do it right now. It's
we'll start
48 minutes instead of 50.
Yep. So we'll do it 1:53. We'll get started again. So good spot.
All right, everybody go take their bathroom breaks.
All right, got about 4 minutes left. How far is Niagara from Buffalo? It's about 20 minutes. 30 minutes. I drive it every day. Yeah, we've done 2 polling questions so far. We'll do another one shortly after we come back from this break. Hey, Jeff.
Oh. Hold on, I'm coming. I'm here. Okay, what's up?
No, I just didn't know if you were sitting there or not. People are saying that you need to go get some WD-40 for your door. I used to live in Buffalo, Cheektowaga. Yep, we're right. Our office is in Williamsville. Cheektowaga is obviously pretty close. Lower Hudson Valley, probably. I drove recently to just outside of New Jersey. I think it was like 6 hours or so. So you're probably, if you're just outside of New York City, you're probably looking at like 6 hour drive or so. Well worth it, especially if you've never been before to Niagara Falls. All right, a couple more minutes. Yeah, David was just commenting on, and he's getting more calls in tax resolution than he's ever had before in 20 years. Yeah, I think, and if for those of you guys who haven't seen, recently, I think the IRS hired like 200 or 300 new officer, or I don't know if they're revenue officers. I think they're revenue officers.
Revenue officers.
Yeah, they were revenue. Yeah, so I mean, that's what you want to see if you're doing tax resolution work. And for those of you guys who are already learning, and you're going to be well positioned for when they start calling the taxpayers. But yeah, I mean, there's so much work out there, and especially if you're local, because really, I mean, there's probably 10, 12 big companies, but they really can't compete if somebody lives within 20 minutes of you, as long as your marketing is set up and you've positioned yourself correctly. They really don't have much of a chance.
Well, we made 2 appointments today for Monday from 2 people that went to both to the same big box company.
Yeah.
So that's good.
Did they want a credit for what they paid them?
They've said that before, but I've already paid them. I said, okay,
Yeah.
nice attorney.
Yeah, that's. I mean, I feel bad for them, but it's kind of funny that I've heard that so many times.
And a lot of times I'll lose out because I said, well, I've already paid them. I as well stick with them. I said, but they haven't done anything yet.
Yeah.
What do you do? So.
Oh man. All right, it's 1:53. I'm gonna do the next polling question by about 5 or 10 minutes or so. So if you want to keep going.
All right. So keep going. All right. So
yeah.
Let's talk.
Well, and welcome to everybody who thought the presentation started at 2 p.m. and not 1 p.m. if you got the time screwed up.
All right. Let me put back on my headset, and here we go. Hold on. All right. So now we're going to talk about the actual IRS program. It's 4.19.17 in the Internal Revenue Manual. And there is an actual program about how revenue officers and personnel should handle the non-filer. There we go. So actually, who will start pursuing the non-filer? They talk about, is there a tax evasion or it's fraud? All right, so what do they look at? This little chart is basically very self-explanatory. They look at the transcripts, the account transcripts, and they look at the history. Is it a one and done, one here, there, one here, there? Do you think they have the ability to pay? How many times did the IRS actually try to contact the taxpayer? They look at their education. They try to find, information about it. They look at if there's FBAR, factor, if there's bank accounts, interest earned or income earned overseas. For example, if they had 1099s or W-2s from an overseas company, do you think there may be FBAR reporting or FinCEN? I always use FBAR because I'm from old school, but the FinCEN. They look at the age and health. Now, why do they do that? Well, if the person's 96 years old and on Social Security, and they tend to try to find information about the health, they may be deemed currently non-collectible. If they owed income from many years ago, they sold a house or sold real estate. Then they look at substantial taxes due, even with withholdings and estimates. Because one of the things you have to be, when you want to go for an OIC or a PPIA or even bankruptcy, remember I talked about for bankruptcy, you have to be compliant. Now with bankruptcy, obviously, if you owe taxes, that's the whole purpose of it. But remember, you can't file bankruptcy for brand new debts. But if you're going for an OIC, if you're going for an installment agreement, you have to be compliant, not only in current returns, but you have to be current in your estimates and your tax payments. I have one that I'm doing now, an offer, and I just emailed him, what's it today, Thursday, yesterday, said, don't forget, your second quarterly for 19 is due on Monday. It has to be made on Monday, or else then they're going to reject your offer. And it's a pretty substantial one. So, and also large cash transactions, they look at to see through your bank statements, indication of large income per the W&I statements. No reasonable cause not to file. There's no reason. I remember we went through some of the reasons for filing. Habitual, or are they trying to hide something? I don't know about you, and I was just going through some of the attendees, and I just happened to catch a few of my buds who are very heavily into taxpayer representation, Ken, Jeff. But they look at things like that. They look at, why they're not following. And prior history, has this guy done it or gal has done it before? Most tax evaders, Wesley Snipes to name one, are tax evaders once and always. They feel they're higher, holier than thou. They don't have to be like the rest of us little peons. They make millions. They want to keep their millions. I make thousands, and I pay my thousands. So what do they do when they feel this fraud? All right. They will not come after you and say, file your return. Basically, all communications basically stops. A lot of times, in the past, for those of you who've been in representation for a while, if you didn't get in touch with the RO, the SO, which is being settlement officer, it's not always because they're ignoring you. Back in the old days, that's what you always think. Oh, I didn't get a return phone call, then they transferred it, or it's just sitting on their desk. But nowadays, if they don't respond to you, it could be that they're dealing with fraud, because they're not supposed to solicit information. They won't lie to you if you ask them, is it fraud? But they won't actually solicit anything, and they'll take anything you want to give them. They will have to go through to their manager and get approval. And then there's here called the fraud technical manager. You don't ever deal with that. That is done behind the scenes, and that is more like a powwow between the revenue officer, their manager, and this individual. And then they decide if they want to go. This is even before it gets to criminal investigation. This is just decide if there is a potential. And we were listening at the Florida Society of Enrolled Agents had their annual convention about 2 or 3 weeks ago. And Daryl Guillot, who is the director of field collection at the IRS out of Washington, he was at the spring conference, if I'm not mistaken, in April for ASTPS, where I heard him.
Yeah, he's come a couple times.
Yeah, and I hooked him before he left, and I said, can you speak with us in Florida? And he did, and he was as great as he was then last April of 18 at ASTPS, phenomenal. But he told us about the increase in the collection division. But he told us that not all referrals by the fraud technical manager even gets to CI. They have to be very particular, and has to be a lot of money, because CI is down. And I remember hearing from a CI agent that I knew, they used to have 5 or 6 agents in Florida. They're down to 2. I don't know what they are now. That was about a year and a half ago, the last time I spoke with them. But they have even less as a percentage than before. So they're really looking at the big bucks, but that doesn't mean, obviously things should be done fraudulently. All right. So before I go to part 3, Mitch, are there any questions there? I have a hard time seeing it.
Yeah, let me see.
Let's take a couple of them now.
Let me see here. If a client had an SFR filed and the result the IRS came up with is acceptable and the client is willing to pay the assessment, is there any advantage to actually filing a tax return?
If they're willing to pay the tax in full, no. Because remember, the SFR, the statute keeps going, but if they're going to pay and they say, okay, I agree with the money, pay it. Like I said before, chances are the amount is going to be higher than what it should be because unless they're not itemizing, they have a bare bones return, no exemptions, they're filing single, just a standard deduction, no credits, then it's probably going to be exactly what you think it's going to be. But if you have kids, there's no credits, there's no exemptions other than your own, no married filing jointly. You have to be single or married filing separately. So is it an advantage to file? Depends. Look at the return, see what is on the transcript, see what they did, and then you decide. And if it's less, obviously, then pay less. Why pay more than you have to? Remember, you only have to pay your fair share.
Cool. Let's see. I don't know how many more you want to do, but here,
just do one more for now.
Okay. Let's see. Does the account transcript give a hint to the work that the IRS is doing behind the scenes? So like if you got a new client that had several years on filed returns.
I'm not exactly sure I understand the question of the scene behind the scenes. No, the account transcripts only state exactly what the IRS did. If they issued out a notice, if they wrote off the tax, if they assessed additional on an SFR, interest penalties, notices that went out. I'm not sure that's behind the scenes. And then when something's issued, if they're looking at it, if they say, for example, they went to the manager to go to the fraud technical manager, no, they don't note that on there. They don't note on it that it's fraud. If they do go for fraud, then they're going to hit you without knowing, you knowing it.
Yeah.
So
okay.
I hope that answered that question. I hope that's what it means.
All right. Well, there you go.
All right.
Oh, you know what? I'm sorry. Let me do the third question. I should have did that while we were just.
Go ahead.
There we go. Here, why don't we do one more?
Okay.
That's a quick one. Should all returns be filed by paper to replace an SFR?
Well, chances are you're not going to be able to file it electronically because you only can file electronically in the year that we're in, say for 18, and then 3 years back. But so and SFRs are generally not done that quick. You may have the last year or the oldest year in the process to file electronically. If you can, I always file returns electronically, whether there's an SFR or not. You don't have to put on the return replaces an SFR. You just file the return. It's an original return as far as you're concerned. It's not a suspended return, superseded return. It's not an amended return. It's only for collections, the return. It's not an actual filed return. So if you can file it electronically, of course, file it electronically.
Okay, cool. I'll give you guys 5 more seconds here, and then we're going to wrap it up and keep on moving. All right, there you go.
All right. Let's see. How many representation cases? 26% says they're new. Okay, that's good. Hope you will get some gist of what we're doing and then really want to delve into doing this and take some more ASTPS classes and do a lot of representation work. There's a lot of cases out there. All right, so let's talk about how to best represent your client, which is the gist of this course. So the best thing to do from a best practices standpoint is that, as if you're an enrolled agent, CPA, or an attorney, we're licensed and we have to follow Circular 230. But even if you're an unprepared, unenrolled preparer, you still have to follow Circular 230. You can have your PTIN revoked if you don't do things on the up and up. And if you don't have a PTIN, you can't prepare a return for money, at least sign a return. You can do things illegally, but we don't propose you to do that. So just make sure you understand the rules of Circular 230. I have that also saved on my desktop. Whether you like, for example, if you can charge commissions or contingency, I won't say commission, that's a bad word, contingency fee. when you can and cannot, just certain things you need to be aware of. So make sure you know Circle 230. Really make sure you know Circle 230. And like I said with the notices, make sure you really know Circle 230. Because when you're dealing with non-filers, you want to make sure you dot your I's and cross your T's. Because for those of you online who know my wife, I have a client that come in, wants me to take shortcuts. I say, you can't support my wife in the manner that I made her accustomed to. And so just make sure you're doing things on the up and up. And also, I do not look good in orange. So be wary of that. All right, so let's talk about voluntary compliance. Basically, it stands for when the IRS when you inform the IRS that there's one or more unfiled returns, as opposed to they're coming after you. That's called voluntary compliance. That is important when you're dealing with certain penalties and so on. You're coming up front. Again, had income from only legal sources. Now, you may think that's funny, but remember Al Capone. They couldn't get him on any of his crimes, but they got him for not filing tax return and paying his taxes. Because remember, income from whatever source derived. It doesn't say whatever legal source derived. That's Code Section 61A. So it makes the disclosure prior to being informed that he's under criminal investigation. Being informed, okay? They will eventually tell you if they're going to go criminal. They have to. You may get a knock on the door. Well, not you, your client may get a knock on the door with the guy with the gold badges and the guns. That's CI. They are cops. They are not just revenue officers. Revenue officers are not allowed to carry guns. They have their due form of identification, and they can come a visiting, but they don't carry guns. If somebody's carrying a gun and they said they're a revenue officer, you're in a little bit more trouble than taxes. So just be aware of that. You file a correct return, and here's that answer to the last question we had. Cooperates with them. File a return that's correct. If you filed a fraudulent return, because say, for example, a lot of cases come down when the preparer hands the taxpayer a return, and it looks good, okay? They sign the 8879. Well, we all know that the 8879 sits in our office. Nobody sees it unless the IRS does a check on us as preparers. Well, the preparer, he or she files a fraudulent return and puts some of the refund coming to their bank account, and they did a direct deposit, but the correct amount went to the taxpayer and the excess went to another account, which was the preparers. Well, they came after the taxpayer, and that they want to go for fraud, even though they had nothing to do with it. But if you find out, or if your client finds out that a preparer, or your new client, representation client, finds out that a return was prepared fraudulently, file a new return. Call the IRS. Make sure you get it done up front. You want to get out in front of it. And then pay the amount in full as possible, or enter into an installment agreement, partial pay, currently non-collectible, whatever the case the alternatives are. Make sure that you do everything beforehand, above board. Get in front of it. All right, so let's talk about the step-by-step representation for a non-filer. All right, during the initial interview, ask them why you haven't filed. Jot it down. One of the benefits, or no, I won't say one of the benefits, one of the things that we as professionals can do is offer our clients something better than the next person. And if you can document and figure out why this person doesn't file, you can keep them on the straight and narrow. That is part of, in my opinion, part of our responsibility. I know of a very good friend who is a former revenue officer, and even Darren Guild said the same thing. Their first responsibility is to educate the taxpayer. Well, I think the same thing with us. As much as the taxpayer doesn't want to hear it, as I have a long-time client that said, just keep me out of jail. I said, well, you're going to have to listen to my speech if you want me to keep you out of jail. He's being a little facetious about the jail because he's more honest than anybody I ever met. But you want to make sure why these clients are not filing so they don't continue doing it. They don't fall into one of those definitions, to make sure that they file on a going forward basis. Because remember, if you do an offer and compromise, for example, your client has to be good little boys and girls for 5 years after the offer is accepted. They have to be current and then good for 5 more years. If they don't, they can call the note in, and they owe the tax and the accrued interest and penalties for what the offer, what the debt was before the offer. Try to ascertain if it's fraud. We'll talk about privilege, which most of us, unless you're an attorney, I don't know how many attorneys are on the line, but we don't have privilege, and neither do attorneys when it comes to tax return. Now, attorneys do when it goes criminal, but we don't. So that's where Covell letters come in, and that's where I had a client a couple of years ago that had an unenrolled preparer, prepared a return, paid the tax, and then they got audited. Well, they had 14 rental properties, 2 business accounts, and they kept flipping money back and forth, transferring between this account, that account. It was unincorporated, so it wasn't even an LLC. So it was my accounts, I can do whatever I want. It ended up being, the IRS came back and assessed them at $1.5 million of gross receipts when he reported only $214,000 because he kept flipping between accounts. So when I saw this, I contacted an attorney we all know and love here at ASTPS, and we worked together on that case. We got out of the fraud part of it. It was more, he's a stupid person, but it worked out. He owed a lot of money, but not close to what we thought it was. But I called the attorney because I had to get a Covell letter because I didn't have privilege on the return, anything return representation on the return. Though I was not the preparer, it was an unenrolled preparer. All right, so here's something that is a big point of discussion among a lot of us. Some people get 2848. We all know that's the power of attorney. That means you're representing the client from the get-go, the minute, for the years that you put on it. So the minute it's signed and you sent it into the CAF unit, you're now representing that client, not just getting notices. You can actually talk to the IRS and you're representing them, even though you may not have taken the case yet. Which brings me to the point where I only get 8821s unless I'm being retained to actually take the case. For example, if a client comes in and says to me, oh, I owe taxes. Okay, no problem. How many years? He goes, whatever, 5 years. Why didn't you file? I said, I owed 1 year and I just never got around to it, and I got sick, I got this, whatever the case may be, whatever reason there is. I said, okay, let's see what there is, because the client doesn't even know how many returns. So a lot of times I do my representation in 2 steps, the discovery and then the actual representation. So at the point of the discovery part, I don't want to represent the client before the IRS because I may not take the client yet. So I get an 8821, allows me to pull the transcripts and get notices while I'm investigating. But that's a decision. And what years do you put? I know several that do several years before to the 3 years after. You ought to do 3 years from the year you're talking about. I have not always done 3 years hence. I've gone back because the client told me 5 years, I'll go even 10, just so, because the client doesn't always know. And you only have to go back, I'm using air quotes for have to, go back 6 years to file a return. The Internal Revenue Manual says that, though you may go back longer, depending. But the IRS only will ask you for the last 6 years of unfiled returns. All right. Engagement letter. If you're doing representation work, you should even do it if you're doing tax prep, bookkeeping, payroll, whatever. You should always have an engagement letter, especially when you're doing representation, because now you want to make sure that the client knows what you're going to do, and especially on the more important part, what you're not going to do. In my opinion, that section is more important. Like, for example, mine says I won't go to appeals on say an audit. On a collection case, I do go to appeals, one level of appeals. It says I can't go to tax court. I don't get involved in criminal. I have a separate engagement letter if there's non-filed returns. So the one that I'm just doing collection says doesn't include tax return prep. That's a different thing, because a lot of times I'll get collection for unfiled returns and I'll send the client back to the preparer to prepare the returns, and I'll do the collection work. That's very popular. I do a lot of that. So, but make sure you have the engagement letter. Make sure it is reviewed by an attorney in your state for purposes of what your rights are, not so much what the rights are of the client, but more your rights. It's really a CYA. It's to cover your butt. Make sure you get an engagement letter. All right, here's the most important thing. Get that money, folks. If you listen to Bob McKenzie, another longtime speaker, I'm sure many of you, if not all, have listened to him. He always says that in one of the first things, get that money, get the retainer. Now, whether you do it as a retainer against billable, whether you do a retainer for flat fee, whether you get it up front, whether you do payment plan, it's up to you, but make sure you get some money before you even start the work, because here's the thing. If they owe the IRS, what do you think the chances are of them always going to pay you? So you get credit card authorizations, whatever you want to do, depending upon who you listen to. If you listen to Lola, if you listen to Rosbrook, if you listen to Bowman, whoever, they all say the same thing: get the money. All right. And again, then you get the POA once you decide if you're taking the case. Once you look at the transcripts, you decide to take the case, get a POA. You can't get a tax mod A well, I've never done it, so if anybody could correct me if I'm wrong, get a tax mod A with just an 8821. You definitely can't do it with a FOIA. You have to get a POA with a FOIA request. But that's get whatever information you need. If you're in the middle of an audit, for example, you may want to get the copies of the audit reports and the audit notes, the auditor's notes, but you need to do that through a FOIA request. All right, so again, I mentioned this briefly before. What returns and how many returns to file? All right, that's 6 years. Whoops, I went too fast. Okay, the Internal Revenue Manual specifically says 6 years. All right, and I bet you didn't know that you are a FATP, FATP, and that stands for Federally Authorized Tax Preparer. That is what we are called. If you're a CPA, an enrolled agent, or an attorney, you're a FATP. If you are if you took the the Registered Tax Return Preparer, which doesn't exist anymore, so that doesn't count. If you're part of the AFSP, the Annual Filing Season Program, that's not a credential, so you're not that either. You only have limited practice rights with that anyway, and that's only on a return that was audited. You can't represent them before the IRS in collections. So let's talk about privilege. That's very important. So if you give them both oral or written tax advice to a taxpayer, you can be protected. Just make sure you have separate engagement letters, billing statements. You have to have your files in order. If it does not extend to criminal tax matters, you definitely want to make sure you have an attorney that you can call at any time. Like I said, I do. I have him on speed dial. He knows it. So I talk to him all the time. We've done several cases together. Even if it doesn't come down to that, he's my sounding board. He'll tell me on the straight and give me the skinny of what I should and shouldn't do from a legal standpoint. I do not profess to be an attorney by any stretch of the imagination. My expertise is in this stuff. All right. I do mention, and I say it here, engagement letters should address the confidentiality privilege. We don't invoke privilege. The client does. I tell the client right away, if you don't want me to know, don't tell me. Because once you tell me, once it's out of your mouth, I can't unhear it. So you have to be careful with that. If a federally authorized tax practitioner does not communicate tax advice document to the taxpayer client, but retains it in his file, and if the document is closely related in time and materiality to the taxpayer, it may qualify for privilege. Okay, work product is not always privilege. Okay, so it says if the tax advice document is not communicated to the taxpayer and is remote in time and materiality, the document may still be protected. So it depends. So again, you need to make sure your client understands that if he doesn't want the IRS, now it's not like we're going to go run to the IRS and tell anybody, but if the IRS asks, we can't say we don't know because you just lied to the Internal Revenue Service. You can never lie to a revenue officer. That's a federal crime. So, but what you don't know won't hurt you. Just make sure about that. All right. So let's talk about the additional assessments. There are penalties and interest. We talked about the late filing, the late paying, an SFR. starts the assessment of that tax. Remember, failure to file 5% a month, failure to pay 0.5% a month, could be 1/4%, depending upon if you're in a direct debit installment agreement. And then there's interest. Interest is assessed, and it changes every quarter. It was 6% for the past year or so. It kept rising. Now it dropped this past quarter, starting with the third quarter, July 1st, at 5%. So that's something to consider there. And that's what I was saying. All right. Again, if you enter into a direct debit installment agreement, that 0.5% can drop. All right. Again, if they're combined penalties, there are both failure to pay and failure to file. The failure to file is reduced by the failure to pay because it's capped. If the return is over 60 days late, the minimum penalty can be $135 excuse me, dollars or 100% of the taxes due. Now, this is the big thing. Frivolous tax protesters is a $5,000 penalty. So you just have to make sure that, again, the one thing I show these tax protesters is at the door. I won't even entertain it. If somebody says, well, I don't want to report this, I don't want to report that, I said, well, there's the door. You can go down the block, find somebody who doesn't have a license, and then you take your chances. I won't do it. I won't turn them in. And here's another thing, that if you look at a return that looks fraudulent or looks wrong, your responsibility under Circular 230, remember I said you must know Circular 230, is you need to tell the client about what your feelings are. You do not have to do anything about it. If the return or the item in question has no reflection on the returns that you're doing, you don't have to worry about it. But you should document it and should make sure the client knows about it. You should have to tell the client what are the penalties for ignoring your advice. But that's all it is. Advice is to be given, not always to be taken. And that Circular 230 says that. So just make sure that your client knows, and you document it that you told him that, or told her that. I'm using him in the generic term. Sorry, ladies. Just make sure that they understand what the issue is. All right. Negligence or intentional disregard. Yes.
Gonna interrupt you. Do the fourth
Yes.
polling question here.
Sure.
And just to be clear, while we're doing this, I'll ask you one quick question, because there's still people who don't seem like they got it. If somebody comes in and they have 10 years of unfiled returns, how many of the returns do they actually have to file?
6.
Okay.
Then again, but if there's SFRs from 10 years ago, but they weren't assessed for 3 years after that, so if you're only 7 years old, I would file that, even though the return is 10 years old. For example, a 2009 return, you would, if you had unfiled returns without SFRs, you file 2014, 15, 16, 17, and 18. That's 6 years. But if they had an SFR from 2010, which is 9 years old or 8 years old, you may want to file it. That answers that other question, would you file an SFR anyway? So even though it's older than 6 years, you may want to file it if an SFR was done for one of those older years. But if not taking into account SFRs, file 6 years.
Okay. And there's a lot of people asking state questions. I'm assuming that it probably varies state by state.
Yes. For example, well, Florida doesn't have an income tax for personal, but California, it's 20 years. But as a friend of mine told me when I was at the Supers, they keep extending it so it could basically go on forever. The FTB is a weird animal, but it is a state by state, has their own statute of limitations, and you need to be aware of that.
Yeah. All right. I close this polling question and you can keep going.
All right. So again, there's a 20% penalty for negligence or intentional disregard. This is the substantial. Remember, the statute of limitations went from 3 years to 6 years if they substantially understates their income. There we go. All right, civil fraud. This is the case that I was working on, I mentioned before. This is the only thing that we absolutely lost on. They charged the 75% penalty. We tried to get it to 40. We first asked for 20 for the substantial, for that penalty. but we didn't win, and we tried to get it compromised. Their compromise was they weren't going after the $1.4 million of income, and the 600,000 or 500,000, $600,000 in tax, basically, because it was self-employment tax. So we kind of acquiesced to the penalty, because we couldn't actually prove out the 1.4 million. We couldn't prove out all of it either. So it was a nice compromise, worked out for the client. But they're up to 75% penalty. And here's criminal. False statements. It's a felony. This is not only just for the taxpayer, folks. This is for us too. Remember, it is a felony. You cannot lie to a revenue agent. You can't even do a what if I told them. No, there is none. It's either a full truth or not. 70% civil penalty again, up to 3 years imprisonment, up to $250,000 fine. Tax evasion, same thing, but up to 5 years imprisonment. They don't play around. Interest is not actually a penalty. It's additional monies owed, charged on the outstanding balances. And like I said before, it changes every quarter. You should be aware of that. When a client gets an interest factor, first thing I do is I look at the rates, that schedule they give on their third page, usually, depending upon. But usually it's on the third page of the notice, and I look at the rates. And I have found that they didn't change the rate one quarter, a couple of years back. I'll never forget that. Didn't know how that happened, but I make sure I check that. Check the math. They're not always 100% correct. All right. Again, I tell my clients this. It may be cheaper. The IRS does not want to be your bank. The faster you pay them, almost the faster you get them off your back. I'd rather have you borrow money. Back in prior to TCJA, I always told somebody if you had a line of credit, take it from there. The interest is probably lower. The payments are probably lower, and then you don't have to worry about the IRS, just have to worry about the bank. But now with the lines of credit and the home equity loans and so on and so forth, not the interest not being deductible, depending, it's not always an option. But it's just something you want to make sure that you express upon your clients, is that using the IRS as a bank is not the best option. All right, so let's talk about the non-filing and living abroad. There's a streamlined method that was developed in 2012. Many non-filers of income tax returns, I had, not so much in the past couple of years, but in 2000, I'm trying to think back, 14 and 15, even through 16, I had more what we call accidental citizens. And if you don't know what that is that, I'll give you a prime example. I have a client who was born in Belgium. Father was Belgian, married an American woman, lived there, raised there, came here just to visit mom after the divorce, but never really, just came for holiday, as they call it. And he never filed a tax return, ever. And never filed a FinCEN, ever. And he didn't have to owe any income tax because he had the foreign tax credit or the 2555 or the foreign earned income exclusion, because he had, but he had no income tax requirements, but he had a FinCEN. And we filed 6 years, and I called the Financial Crimes Network, Enforcement Network, and they told me just go back 6 years also. Coincidence, and they said, oh, just like the IRS wants, it's just coincidence that they told me to go back 6 years. And I filed 6 years worth of FinCENs, and so far we haven't heard anything. So hopefully they won't get him. Wasn't willful. Again, he was an accidental citizen. There are no penalties. And again, go back for 6 years. For the tax returns, file your FinCEN for 6 years and make sure everything's on the up and up. So who's eligible? Non-residents since 09, did not file a return from that point forward, has a social security number. Most of the people do, the ones that I've dealt with, all had social, not just ITINs, we're talking social security numbers. Remember, if you're a social, you should have a social security number. It says here valid ITIN, but most, like I said, that's only for residents. Most of the time, citizens will have a social security number when they're born. Their parents will get it for them. Very little tax due, because if they pay tax in the country of where they were a tax resident, they will have a foreign tax credit. You just have to make sure about treaties and so on, and where they're earning the revenue, and so on. The more money they owe, again, the higher the risk. They must file the 14438. I said providing the handouts. I did neglect to attach it, but it's on the internet. The risk factor may rise if any of the following are present. Any returns through this program claiming a refund. Material economic activity in the United States, that's the big problem. You're trying to get out of the streamline because, again, they're accidental. They live and work overseas. They really have no effectively connected income to the United States. If they do, it could be a risk. I had one client that the only thing that they had was his parents were in a partnership. He was a 1% owner, got a K1 on that income. It happened to be a loss, so he couldn't take it anyway because he had no basis in it, but it was just some economic activity. All right, again, make sure that they file returns foreignly. I had to get the Belgian return and I had to get it translated. I don't know if any of you have ever done international work. I don't do many. I don't do really any international work per se. I do the U.S. returns for expats, as we call them. Again, if they're under investigation, you want to make sure that your taxpayer is voluntary. We talked about that before. Make sure that your client does things before the IRS contacts them. It's always better that way. FBAR has previously been assessed, and they're still non-compliant. That can cause a lot of problems. And this is a big one again with the FBAR. They have a financial interest located outside his or her country. My client, for example, I asked him, do you have any bank accounts anywhere else? He said no. I said, so you've never opened an account in Germany or any other Switzerland or anything like that? He goes, absolutely not. So I have it written down, and if we find out he's wrong, I have it written down. And the same thing with some entities. This is the one I was talking about, the partnership. And that had a loss, so there was no real tax effect there. All right, some things you can consider about it. There's some tax planning. All right, we have about another 15 minutes or so to go. So this is just the last couple of sections, some considerations and bankruptcy and college. So let's talk about bankruptcy. Remember we talked about an SFR as return
Hey,
for
Jeff.
collector. Oh, let's do a polling question.
Yeah, you know, before we just start the polling question, let me do that because then we'll wrap up the last one in 15 minutes.
Okay.
That'll be cool. All right.
There's a race between Tax Help and Pitbull. And Tax Help is leading by a nose.
And
It
doing
just
it by
lost
hand.
and it's losing its nose.
That's funny.
Nemeth will be happy.
Well, I'm good that the answer of you know, haven't worked a case yet has been consistent, so that means that people aren't lying.
Funny. Any other questions while we're waiting for the polling to go, Barbara?
Let's see. Someone said Google Translate is wonderful.
Yeah, Google Translate. I've done that before. But remember, there's idioms in tax returns. They're not all the literal translations. So sometimes it doesn't always work. So I'll have a client translate it for me.
Well, there you go.
And it works out funny. And I start trying to read the thing in a Belgian or a German accent, and they go make fun of me with my New York accent. So it doesn't work well.
Yeah, you probably stick out down there in Florida.
Yeah, right. No, not on my coast. We're most from the Northeast.
Oh, really?
Oh, yeah.
Everybody's fleeing New York. That's why.
That's right. We're
All
New
right.
York South.
All right, you can wrap it up here then.
All right. So let's talk about bankruptcy. Okay. There are certain things that you have to consider. You must file all required returns, ending with the 4 years, within 4 years of filing of your bankruptcy. You should make sure all your current taxes are paid, because remember, you can't file bankruptcy on current stuff. We'll talk about how SFRs affect. During your bankruptcy, you just keep continuing to file and hopefully continuing to pay. Now, this is the important part. An SFR does not constitute a return for bankruptcy purposes. All right, the taxes assessed cannot be discharged even if a corrected return was filed. Now, this is another thing that we have to talk about. These are on late returns. I call this the one and done. The IRS takes the position that if you filed an SFR, that means it's late. So they say if you're 1 day late, and they call it a moment late, it cannot be discharged in bankruptcy, even if the bankruptcy judge or the bankruptcy court says we're discharging it. The IRS does not have to agree. That's the position that they take. They said we're not going to allow you to bankrupt it, even if you fall within the 3-year, 240-day rule. And here's the 1st, 5th, and 10th circuits that have agreed. It hasn't been seen in all cases, all circuits, sorry. But it's just something you need to be aware of, that if a client is late, chances are the IRS is not going to accept the bankruptcy or the discharge. A lot of bankruptcy attorneys are not aware of this. I've taught before bankruptcy attorneys and talked about it. We've gone over these cases, and so it's just something to be aware of. They taught me about bankruptcy, and I taught them the tax side. And there's a reason why they don't do taxes, and there's a reason why I don't do bankruptcy. But just something you have to be aware of is the one and done, or if an SFR, again, it's late, there is no discharge. All right. Just to read this, a discharge under these particular sections of this title does not discharge an individual debtor from any debt for a tax or customs duty of any kind for the period specified in the sections of this title, whether or not a claim for such tax was filed. If you go on further, it says, with respect to which a return or equivalent report was not filed, was filed or given after the date on such a return was last due. Okay, so that's right after the bankruptcy code even says that, even though the judges, and I've had many people, I've seen it, that they come in with the discharge, but the IRS has pulled the transcripts, it's still there. Now, here's another thing that you may want to be aware of in the case of a bankruptcy, or if you pull the transcripts, and remember I talked about after the collection statute, you see written off. But there's another way the taxes can be written off, not paid off, written off. If you had a joint return and one of the spouses files an innocent spouse claim, and if you, I've done innocent spouse class, and the intervenor, which is the non-innocent spouse, doesn't dispute it and says, okay, it really belongs to me, and the other spouse has been granted innocent spouse relief under 6015, either B, C, or F. Well, the transcript will say written off. The reason being is a joint return, that the IRS has one transcript for the joint couple. So when they split it, they write it off on the joint transcript, and then they put it under the name of the surviving, for lack of a better term, spouse. But you can't get that transcript. It's in the tax mod A. You have to specifically request it from PPS, and I would say the 10 times I've asked for it, 9 didn't know what the heck I was talking about. And I learned it from an RO going through one of my first Office and Compromise about 12, 13 years ago. I said, oh, this is written off. You don't have to worry about it. He goes, well, I shouldn't be telling you this, but. And he was very nice and taught me all about that. So that's something you may want to be aware of, that if it's a joint return and it's written off before you did anything, you need to find out if there was an innocent spouse claim or they split the accounts. Because remember, on a joint return, they're individually, severally liable, and they can go after each individual one jointly, separately. So that's something to be aware of. All right. Now there's a BAP, what's called the Bankruptcy Appellate Panel. It said the 9th Circuit ruled that debtors who file income tax returns, even if the IRS assesses taxes for the years in question, can still charge them and discharge them in bankruptcy. The contradicts the holdings in the 1st, 5th, and 10th circuits that late filed returns do not count as returns for determining whether such obligations can be discharged in bankruptcy. And it says the 9th Circuit ruled on bankruptcy, allowed it though an SFR was filed, then returns were filed with normal parameters, but did not address the 1 day late rule. That's the case in the 9th Circuit. So Ninth Circuit, for those of you who don't know, that's the west coast of California, the west coast of the United States. And so they're the ones who ruled on that. They're one of the most liberal cases. So that's something to think about. Just one second. Okay. Then the third district, it's called the Davis case. Mark W. Davis entered an order certifying the issue to the Third Circuit from the Bankruptcy Court. The case is between the IRS and the debtor. The issue of the one moment late rulings of the three circuit courts will not necessarily be argued in the third. So at the time this was presented, I haven't seen anything where they actually decided what happened when New Jersey Circuit said they're not going to rule on it. So I'm not sure if they're going to take it to another avenue. All right. One of the last pieces, let's talk about college funding. I used to be a certified college planning specialist back in when we used to do FAFSAs and we can get paid for it. And we had to do returns early and do a lot of different things. Now with the IRS automatically downloading information to the FAFSA, free application for student financial aid, for those of you who didn't know what that meant. But if you don't file a tax return, you're not going to get any need-based financial aid. There's merit-based, meaning due to like scholarships, due to your athlete, musician, or something special, academic. But if you need need-based, meaning due to financial constraints, you're not going to get any unless you file a tax return. So that's very important for these non-filers. I've had several, not in the last couple of years, that wanted to file back because the kid was going to college, and that's what they were told, and which is true. So we had to file all these back tax returns to get some financial aid. All right. We're basically at our stopping point within a couple minutes. If we have another couple minutes for, somebody just texted me, said late filed after SFR, not dischargeable or any late filed return. All right.
Who's texting you?
He's taking advantage of me. All right. And he's from the Ninth Circuit, California. These people from California, I'm going to let them have it.
Trying to cut around.
Yeah, but just to answer that question, late filed after SFR. SFR, according to the IRS position, an SFR is a late filed return. Otherwise, it wouldn't be an SFR. So in the same instance, they're not going to discharge either one of them, or they're not going to allow discharge on either one of them. So I hope that answered that Californian person first.
That's too funny. I'm pretty sure. I think the last time Roger was doing a webinar, people were texting him too. That's pretty funny. So I'm going to do the last polling question, and then we can ask a couple questions. And then for those of you who are interested in learning more about the boot camp and the academy and different courses that we have, you can stick around after. For this question, don't count that I told you all about it in the beginning. So if you had never heard about it until today, then that's what I'm looking to find out who's heard about it in Q. All right. So let me find these questions again here. Actually, there were a couple of good questions I wanted to ask you. So one, if a person has flown under the radar and now they've come to you because for whatever reason they want to get back on track, and maybe they've never filed a return, or they haven't filed one for 15, 20 years, something like that, and they file those 6 years of returns, does the IRS then look at them differently or scrutinize them more or anything like that you're aware of?
I don't know for a fact, but remember I talked to you about they looked at your prior history, and they will look at you for fraudulent purposes. If you're just I'm using air quotes, a normal preparer, I don't think they just want you to get compliant. They want you to file your tax returns. I don't think they're going to look at you. Are they going to look at the return more? Yeah, I think so. Because they want to make sure that it's not fraud. There's a reason why you didn't file. I mean, in their minds, then they just have to say, well, this is a basic return, we'll just let it go. But if you're a Schedule C and have all these expenses, are you going to get audited? I can't say yes or no. I know there's some former revenue officers online, so maybe they just want to jump in and put it in the question section. But I would think, yeah, they're going to look at it a little bit more closely. I don't know, differently is not a right word, but closely.
Okay.
How's that for bailing?
Yeah, these guys are killing me because they're making fun. Usually I do my last polling question is the certificate's going to be sent out tomorrow. So people are messaging in, giving me a hard time, asking me where the certificates are. It's funny. If so this is one too that I'll tell you what we do at our office, and I'll ask you what your opinion is. But the question is, when you're catching up a client who has unfiled returns, do you file all the unfiled returns at the same time, or do you send them one at a time? So I know at our office we send them all at the same time, but we send them in individual envelopes.
Yeah.
Because I know we've had in the past where they just look at the top one and they keep moving, so then they miss returns.
Yes,
So,
that's exactly what I do.
yeah. Okay.
And I send it certified return receipt.
Mm-hmm.
Yeah, I have to do it in separate returns, and I mark the client's name on it and the year of the return, and then put it in one big envelope.
Gotcha.
Now, again, back to that original question, I'll try to electronically file whatever returns I can. And then file the other ones by paper if they can't be e-filed. But if I can e-file, I'll e-file.
Gotcha. Somebody was asking a question about Q if they had called state. I believe they do not do any state. I think he might have tried that before and it didn't work out because the states are much smaller than the IRS, so it for whatever reason just didn't work out.
Yeah,
so
it didn't work out. Yeah, they don't do state at all. They have about 1, 2, 3, 4, 5, 6, 7, 8 sets. I'm looking at my access numbers. There's 8 different places you can call. You can do it through PPS individual, PPS business, ACS individual, ACS business, AUR individual, correspondence exam, centralized lien, and the e-services help desk.
Mm-hmm.
I don't think it's been updated for anything more than that. But I've used the PPS individual and business enormous amount of times. 3 minutes. I think one time it went 6. One time it went 6 and I yelled at him.
Somebody said the texting guy doesn't represent all Californians. That's funny.
That's funny.
Oh, there's so many questions here, guys. I'm trying to more comments in it, if anything. I think I'm gonna send these all. I'm gonna send these all over, all the chat and everything over to you afterwards. So maybe you can look through them and pick out some more questions if you want to reply back to anyone. But I think we're just gonna end it here.
Okay. You can talk about your boot camp.
Yeah. Let's see. Just double check one more time to see if there's any repeating questions here. Yeah, I think we answered a lot of them. Okay. All right. Well, I think we'll just stop it here. Thanks, Jeff. Thank you so much for doing this presentation for us. And thank you guys all for coming today. Like I mentioned in the beginning, I'll get the certificates out tomorrow, probably tomorrow morning. We'll get anybody who gave us their PTA numbers for the EAs. We'll get those all submitted for you. And our next webinar is going to be July 24th at 2 p.m. And this is going to be a brand new speaker. He's a former trial attorney with the Department of Justice, and he's going to be talking about civil exams. So that's going to be a pretty interesting one. So make sure you keep an eye out for the registration emails for that. And then I'm going to steal the screen back away over here. And so the presentation, I'll talk for like 20 minutes and I don't look at the questions, and then I'll look back up and there'll be like 20 people saying, is the presentation over yet? Yeah, so we're gonna end it now. And so officially it's over, and I'm gonna talk to you guys. Oops, let me switch this.
Yeah, you can do it.
and I'm going to talk to you guys about our boot camp. But if you got something to do or you've already gone to boot camp before, if you can, feel free to. We'll see you in a couple weeks at the next one. All right, let me get my stuff here. All right, so if you're new, like that, you're one of those 26% of tax resolution or of practitioners on the webinar today, and you're interested in getting started in tax resolution, or maybe you've been dabbling in it, maybe you got a case or two, but you're looking to get more knowledge in it and really make it a career path for you, then you're going to want to check out our boot camp. So actually that number is a little bit outdated. So we're actually at the Niagara Falls boot camp, we're going to have our 3,000th attendee. So we're going to do something pretty cool for that group of people, and we're going to be raffling off a couple of things. I think we're going to raffle off a helicopter ride over Niagara Falls, which is really cool. I've done that before, so I think that's going to be one of the things. We're going to do a couple other things too. But so if you're on this webinar, you thought it was interesting, you're curious about it. So why might you want to get involved in tax resolution? So first is you can do it year round. So I would never tell somebody to sell their tax prep practice and quit doing it. I think you should keep doing it as long as you can, or kind of what I see a lot of times is practitioners will start getting more into tax resolution, and they'll either hire somebody to manage the tax prep part, and then they just focus on the tax resolution, so they still keep getting that income every year. But yeah, so the tax resolution, the cool thing about it, you can do it year round. The average fee is obviously quite a bit more. I mean, we're in Buffalo. Our average case is $3,000 to $5,000, for a pretty standard typical case. And Buffalo is far, far away from New York City. For those of you who don't know New York geography, we're far from the big city. So it's a very blue collar town. So it's probably pretty comparable with a lot of places where you guys are. Client appreciation. Clients actually appreciate what you're doing for them, as opposed to tax prep, where people just generally complain about why you raised your fee from last year and you're not doing any more work. Every case is unique. I mean, generally, once you get started, there'll be themes that go throughout, all the cases. But for the most part, every situation is kind of unique, and it makes it a little challenging and a little more fun to do. You get paid in advance, so that's something big you want to focus on, especially if you start doing this work. Quoting the correct fees, and you get paid in advance, because let's be honest, these people don't have the greatest track record with paying people. So you definitely want to make sure before you do anything that you get a retainer. And I put this one, stand up to rogue government employees. Every once in a while we'll get somebody who is just really adamant because they wanted to get involved in this because they wanted to defend a taxpayer that came to them because they felt like they were being taken advantage of or something like that. Hang on one second, I'm gonna close the door. People probably already calling asking for their certificates. Man, you guys killing me. So what are you gonna know once you leave the boot camp? You're going to know how to secure the information from the IRS. You're going to learn all about power of attorneys, the difference between 2848, 8821. You're going to know all the notices, the critical dates you need to look out for. You're going to learn how to prepare all the forms. You're going to learn about all the settlement programs. So you're going to learn about offers, installment agreements, penalty abatements, trust funds, innocent spouse, CNC, and you're going to learn about how to represent in appeals, which is sometimes the place where you get the best deal. So you're going to want to get comfortable with that. And then I bold and underline case planning techniques, because that's really what separates you from anybody else, because anybody can fill out a form, but really understanding the case planning strategies that can go into those offers where you see people bragging that they got $50,000, someone owed $50,000 and you got them to settle for $100 or something like that. You really need that's where the case planning strategies and techniques really come into play, and that's what helps you or justifies your high fees that you get for this work. So the boot camp's not just lecture. You're actually going to go through 6 case studies, and you're going to see how those case planning strategies apply and how they really affect the cases that you're working on. So your instructors are going to be Larry Lawler, LG Brooks. He's from Dallas. Larry's in our office in Buffalo. LG just joined our firm. For those of you who may know him from other places, he's also just became our official director of education here at ASTPS. And then we have Steve Klitzner, who's down in Miami, Florida. So he's an attorney. LG's an enrolled agent, and Larry's a CPA and an enrolled agent. But one thing you're going to want to notice on all of these is that they are all active practitioners. So everybody who teaches at ASTPS, whether it be a webinar, one of our live seminars, we're adamant that they are actually practicing what they're doing. They're not dabbling in other things. They're not doing real estate. They're not doing, financial planning. These are people who are actively 100% doing tax resolution work. So to prove it, that's our sign. Lawler Wachowski CPAs. That's our building. There's a sign in our entryway there. And I put some pictures on here because, maybe you just got an email, maybe you saw a Facebook ad, maybe you saw something, and this is the first time you've ever heard about us. It might seem like, well, who are these guys? So we've been doing this for a while now. I've actually been here. I just had my 5-year anniversary, which is nuts. I can't believe I've been here for 5 years. But Larry's been doing it even longer. Larry and John started ASTPS back in 2003. But these are real seminars. I mean, we've had, like I said, we'll have our 3,000th attendee to the boot camp. So there's LG. That was earlier this year in Baltimore. And that's kind of cool. We've never actually done a webinar while we had a live seminar going on. So Carolyn sent me that just before we started. So that's the class that's actually, there's, I believe, 55 people in New York City sitting in a room right now taking the boot camp. So that's kind of cool. So how much is it? The non-member price, $997, goes 5, 10, 15% off from there if you decide you want to become a member. I'm not going to talk about membership today, but you can check that all out online and you can learn about the different membership levels. But basically, the boot camp's going to get you to the point where you can get started in tax resolution, even if you really have little to no experience. If you have some experience, that's even better because you get so much more out of it because you already know, some of the things that you struggled with. Different things like that. So you know what to look out for that you've already ran into that you weren't sure about. But either way, the boot camp, it'll get you, like I said, it'll get you there to the point where you can get started. And then through our membership, if you did a silver or gold membership, silver is $300 a year. You get 4 20-minute phone consultations with Larry Lawler, John Wachowski. So you can go over any case that you get, any questions that you have, and really get one-on-one support there. Here are some testimonials from the boot camp. I'm not going to go through them. We have like 400 of them on our website. You can read them whenever you want. But the point is that even if every single one of these people is lying to you or lying about their testimonial, their experience, they just wanted to make Larry feel good about the class and didn't want to say anything bad to his face, we still have 100% money back guarantee. So even if after the first day, you just don't think it's for you or it's not what you expected, you just let us know and we refund your money. And it's happened before. We had a woman last year who came in and after the first day, she just came up to me and she said, I really just can't see myself doing this. And, it wasn't that the class was bad. She just had the self-awareness to know that it just wasn't for her. So, we refunded her money. So we always get 2 complaints at every boot camp. One of them I'm not going to fix. I don't know how else we try to mitigate it, but it's just a losing battle every time. But the first one is that it went by too fast. So it is a lot of material, but this year we actually extended it by about 4 hours. We didn't add any material. We just slowed it down and we've been getting a great response from it. Still some people wish that it was longer. But who knows, maybe in the future we'll come out with like a 5-day version, but I don't know if we'll be able to get people to commit to coming someplace for 5 days. But 3 days is working out really well, or really it's 2.5 days. Now, the other complaint is that the room's too cold, and I bring a sweater. I don't know what else to tell you with that. Spots are filled up quick. So our next boot camp, I actually didn't think this one was going to sell out just because it's not in the most accessible place in the country. It's not in like a big city or anything. But Niagara Falls, we're actually getting pretty close. I think we're going to max it out at 40, and I think we have 27 people registered. So I think we only have about 13 spots left. But it's gonna be a cool trip. That's the helicopter. Actually, that's a really weird picture. I must have had the helicopter going over a helicopter. That's a little sketchy. The jet boat's cool thing. Go down through the river in the lower river. People always wave at me when I'm down there fishing. For those who like history, we got Old Fort Niagara right up on the at the end of the Niagara River. It's pretty cool. It's a really old fort that the British and the French and the Americans have all occupied. Pretty cool. And we're going to be at the Sheridan Niagara Falls, so it's going to be about a 10-minute walk down to the falls and the state park. And yeah, there's like 13 seats left. It's not. I think we're about a month away now. Yeah, we're tomorrow. It'll be a month from tomorrow. So we got 13. So if you're looking for a cool trip to do this summer, maybe you want to bring your family or your wife, girlfriend along with you. That'll be a cool trip to do. And then after that, we're going to be down. I think Jeff mentioned this earlier. We're going to be down in Fort Lauderdale. That is not the picture. I forgot to change the picture. That's actually the building in New York City. But I think it's on the beach. So just imagine like a beach scene there. And that one's filling up pretty quick too, even though that one's about 2 months away or over 2 months away. So if you're interested, go on astps.org. You can learn all about it and register, or you can give us a call, but please wait till after I'm done if you want to call. That way I can talk to you. So if you've already been to the boot camp and you're interested in learning about what would be after that, so we just created this new course this year. We ran the first one in Baltimore and it went really, really well. It was surprising. Like we actually finished, you know, for a new course, you never know exactly what's going to happen the time-wise, because we couldn't get Larry, LG, and Steve all together to practice it beforehand. So we just sent everybody their individual sections, but we actually finished like within a half an hour of the ending, which was great. And then Larry came back and worked for another like 2 weeks on fine tuning it. So the next one will be even better. But really, it's not that the boot camp covers everything. This is the next level above that really is going to go even deeper into a smaller number of topics. But a couple of those topics, you know, when you leave this class, we want you to be a complete expert in, you know, liens and levies, you know, really have a good grasp of the statute of limitations, planning and analysis of cases. You're gonna go over the really important tax cases that you need to know about hearings, elevating a case. That, you know, that comes up quite a bit when you get, you know, stuck with a revenue officer or his manager's not responding. Where do you go from there? So those kinds of things you really get into. Yeah, and I mean, you can read it, but yeah, so you're going to go into so much more depth, and you can learn more about it on the website. And the pricing is the same. So the only difference is we do have for the boot camp. If you go to the boot camp, you can attend it again as many times as you want in the future, and you get half price. And I'm not sure exactly what we're going to do for the academy since we've only run one of them, but I think we're going to probably do the same thing. So it just gives you a chance to go back, and we have people who take advantage of that all the time, who come back 2, 3, 4 times, and we've had somebody I think came back this year was like their 6th time. They just get their CP every year and get an update and get a refresher. And I've never heard anybody, even the people who've come 5 or 6 times, they always say they get something new from it. And it's a great networking tool too, because we have a networking at all of our events. We now have a networking event incorporated to all of them. And the 3 dates for this one, the first one's obviously gone. The next one's in Los Angeles. And there's, I think, at the time I started this webinar, I think there were 7 seats left, and then Fort Lauderdale it actually has probably about half filled, and that one's out still 3 or 4 months away. So there's probably about 20 or 30 seats left for Fort Lauderdale. So that's it. If you want to talk to me about it, just wait about 5 minutes. You can give me a call, or if you're interested in registering for something, you can just go right online and do it. But that's it. Thank you so much for coming. We had a great turnout today. I think we had over 2,000 registrations for this webinar. So it was excellent. Our next one, like I mentioned earlier, July 24th at 2 p.m. Eastern. And that's going to be a really interesting one because we're going to be talking to a former trial attorney with the U.S. DOJ. So that'll be cool. So, and I don't know why I'm signing off here. Let me look and see if you guys have questions first. Did got all caught up in that? Sometimes I think I have like a radio show or something. Oh, someone said it's always too cold in the hotels for 7 hours. Bring a hoodie. I don't care. Bring a sweater. Bring a blanket. Actually, people do bring blankets. That's kind of, I feel bad, but Larry gets too hot, and you want the course to be good. Let's see. Membership is worth every penny. Well, I appreciate you saying that. There's not too many places where you can talk to, the caliber of practitioners and that have experience like Larry and John, and just get on the phone with them for 20 minutes to discuss your case. When will your 2020 schedule come out? It'll probably be out like in October. Oh, good question. Is Niagara Falls meeting on the US side or the Canadian side? It is on the US side, so you don't need a passport. If you do want to go into Canada, you need a passport or an enhanced license. I know I have an enhanced license and a passport. But the US side is really cool. It gets, doesn't get the props it deserves, I think. Is it beneficial to take the boot camp if I'm an NTPI fellow? Yeah, I think so, especially if you don't have to travel far for it. We have people all the time who come take it after they've been through the NTPI program, and they still learn a ton of stuff. And you probably are familiar with LG Brooks, so he's one of our instructors, and he used to teach in the NTPI program. So you're probably familiar with him. But yeah, and especially if you're going in a city that you do a lot of business in, you get to meet a lot of the practitioners who are taking the same journey that you are. So that's pretty cool. I did the boot camp in Atlanta back in 2012. Geez, 2012, that was before my time, and it was 100% worth it. Well, I appreciate that, Andrew. Joseph, why does this guy keep saying go Mets? I don't know how the Mets keep getting involved in this. He's been saying it the whole time. A big Mets fan, I guess. What's the main difference between the live boot camp and the self-study? So we actually don't have a self-study boot camp anymore because the boot camp just needs to be experienced live. So that's why we created the rescue squad. So we do have another course that, like I said, it's called the rescue squad. It's 6 hours, and it's kind of like the bare bones basics. It'll get you familiar with all the different programs, but it doesn't have any case studies or anything like that the boot camp does. And obviously the boot camp's 20 hours now versus 6 hours. But the advantage to the rescue squad is that you can watch it as many times as you want. So you get a 6 or 12 month subscription depending on what you want. And yeah, you can keep drilling it into your head over and over again. And then you go to the boot camp afterwards, and you even get that much more out of it because you're familiar with the terminology and the programs and things like that. Are the credits available for the boot camp? Yes, you get 20 hours. And the academy is 16 hours. Where is the boot camp in Los Angeles? Well, the boot camp already happened in Los Angeles. The academy, the advanced course, is actually in the same place as the boot camp was, but it's right by the airport. I've been to 4 boot camps, can't beat it. Thank you, Peter. Oh, yeah, I've seen Peter like 3 times this year already. Must you be an EA, CPA, or attorney to do this? Yeah, you do need to be licensed. I mean, theoretically, you could kind of help guide taxpayers, but if you want to do this long term, it only makes sense to get licensed, whether that's become an EA or a CPA. If you're looking for a good EA exam prep class, I would check out taxmamba.com. We work with Eva quite a bit. We even have some of our own for our CPA firm. We've had quite a few of our practitioners go through her class, and it's great. Go Brewers! Oh no, this is getting ugly. Do you recommend the academy first? So actually, you have to go to the boot camp first, or you have to have the same amount of experience or equivalent to the boot camp to get into the academy, because the academy is a much higher level, and it really requires that you have a grasp of the boot camp topics. before you can go to the academy. Otherwise, you're going to be asking questions that the rest of the class knows. Can you repeat the date for the boot camp in Fort Lauderdale? I can find it. And like I said, just imagine that being the beach, because it is a beach. Let's see. So is Niagara Falls boot camp? Yep, Niagara Falls is a boot camp. It's 2.5 days. I purchased the home self-study boot camp several years ago until I could take the class in person for 50% off. Yeah, no, we used to sell the boot camp recorded. So if you ever bought that, then you can always come back for 50% off. It's taxmama.com for the EA prep course. Highly recommend it. I don't know if we have a special link or anything, but if you email her and just say you heard Mitch at a webinar say something, I don't know, maybe you'll get something. I don't know if my name's worth anything, but it's worth a shot. Yeah, a couple of you guys are asking about that. Yep, so it's taxmama.com. Check it out. Great class. How do I get my CP certificate? Yep, we're going to email those out tomorrow. Oh, there you go. Patricia's saying Tax Mama is excellent. Tell us about the NQ deal. I think it's just $20 and you get 200 minutes and you can try it out. It's an excellent program. I mean, I don't remember off the top of my head how much it is a month after that, but I think it's like $40 a month for some kind of amount of minutes. It was funny when he first started, I always gave him a hard time about the minutes thing. He's selling minimum minutes. I thought I was back in like 1999. But he's got a good product there, good service, and I think it even integrates with TaxHelp software somehow. Is there any deals with Rogers software? So yeah, I mean, I don't know. You can try. I have a link. If you go to astps.org/TaxHelp software, and if I put a button on there, because he's got this weird link that's case sensitive, so I just figured I'd send people there. You might be able to get his $250 for 6 months deal. So it's astps.org/taxhelp software. You can check it out if you're interested in trying that out. But yeah, NQ is it's a great product, really. Is there a website for NQ? You're spelling NQ wrong, but here, let me type it for you. That's why it's funny. I hate the name of it, call NQ. No one ever knows. No, it's not. That's kind of like our ongoing thing, but you're going to want to sign up for it today before you forget. What's the best software for tax res? Well, I mean, we basically have we have two sponsors. It's TaxHelp Software and Pitbull. Pitbull has been around the longest. They were the first company around, and then TaxHelp Software came in and they kind of invented the transcript process. And so at first it was just people were, they had bought Pitbull and then they bought TaxHelp Software just for their transcript product. And then slowly, well, then Pitbull added transcripts and then TaxHelp Software added all the other, tax resolution functionality. So, I mean, generally what I see is a lot of times people who are newer tend to gravitate more towards Pitbull just because there's a lot more hand-holding involved in it. And then kind of once you know what you're doing and you've done a couple cases, it seems like a lot more of the advanced people tend to gravitate more towards TaxHelp Software because it's easier. You don't have to, go through those TurboTax like questions where it's asking you the numbers and what you want on the form, and you can kind of go in and manipulate it pretty quickly and easily. So that's my experience anyway with the the people I've talked to. I would like to. Do I know anyone who has internship opportunities? I don't know. What I would say is if you were a member and you wanted to go, or if you want to send me an email, Patricia, and I can maybe hook you up with some members who are in your area. Maybe there's some opportunity there. It's really difficult for those of you guys who are the business owners. I mean, it's really difficult to hire for tax resolution. It's one of our biggest challenges. I mean, we're actually hiring right now, and you know, it's really difficult. If anybody in here is from Buffalo and or within, you know, a reasonable distance and you're interested, there you go. Here, Patricia, somebody emailed or just messaged me about it. So send me an email and I'll see if I can what I can find for you. But yeah, hiring is very difficult. Jeff mentioned engagement letters. Do you share them at the boot camp? I don't think we have any specific. We might have sample engagement letters, but we also have engagement letters in the Ultimate Communicator product. So it's 150 response letters for $150. Oh, I'm sorry, 100. Yeah, 150 response letters for $80. I'm sorry, I don't know what I said. Is the call and queue offer still valid? Yeah, go for it. Go to astps.org, or I'm sorry, go to callandqueue.com/astps. Cannibal. Well, now people are asking about where do you find job openings in this field. Stay tuned. Maybe that's something that's coming soon. Who knows? I'm moving to Buffalo soon. Well, send me an email if you're interested. Okay, cool. All right, so, and there's a couple people asking about the recording. So how our webinars work is we do all the live webinars for free, and then we actually have a library of about 40 webinars that we've done in the past. So if you're interested and you want to become a member, you get access to all of those immediately. So they're not for continuing education credit, but you can still watch them, so you can learn, and that's, in my opinion, the most important thing. You know what? Why not? I'm just gonna pull up our website real quick. I think I already had it open. I'll just talk about the membership really quick. Make sure you can see this. Yeah, what are the benefits of being a member? Okay, cool. There we go. So basically we have 3 levels of membership. So we have bronze, silver, gold. Bronze is 180, gold or silver is 300, and gold is 428, and these are a year. So some of the different benefits, you can go on here and look and see how they're kind of broken down, but we do a case study every month that you get access to. You get access to our Facebook group, which is really active, and I'm kind of proud of it, and I'm really happy that our members are engaging and using it, because that's like an unbelievable tool. I mean, we have a couple people a day who are posting questions in there and getting answers from other members. I mean, Jeff is on there all the time answering questions. Roger Nemeth is, a lot of our other speakers are in there. It's a great way to get to know each other and get feedback if you're struggling with something. So that's a really cool opportunity. Like I said, I put 17 new continuing education. I mean, that's what you're watching right now, these webinars that we do, which we actually have 20 scheduled. Get access to the library of all the webinars. In the silver membership, we actually give you a course every month out of our catalog. That's in addition to all the webinars. That's actually like an advanced program. That's usually like around an hour and a half. You get access to that. But the biggest thing is you get the phone consultation. So for $300 a year, anytime you get stuck on anything and you want to get a second opinion, you give us a call. We schedule an appointment. You send in an email with your question. Larry and John, they review them all. They talk about them ahead of time, and then they're ready for your call to kind of go over the answer. And then you also get discounts on the seminars. And then in the gold, you get some marketing tools. You get 2 more phone calls, and then you get some marketing tools. So our lead generation letters, those are our federal tax lien letters that you can go out and start using. We do marketing trainings. I'm not exactly sure what this is going to turn into, but I might start turning and doing more, not more marketing trainings, but basically our trainings are just me getting on a webinar and telling you about what we're doing in our own firm and kind of what's working for us, and just talking about marketing. So we work a lot with Michael Rosbrook, and he's got a really great marketing, like overall marketing program that if you're really looking to get serious about this, I would take a look at. But our marketing training is more just me talking about, what's working for us in the last 3 months. And that's pretty much it. And then you get the 15% off. So there's tons of learning opportunities, really. I mean, if you became a member today, you'd have your handful for a couple months, even if you were listening to a webinar every day or something like that. What are referrals? You refer us? Yeah. Oh yeah. We get, not that we get a million calls or anything, but we do get taxpayers who will reach out to us. If you go on our homepage, there's a button that says find a member. They submit their zip code, and we'll look up the members in the area and we send it in the list, and then there you go. Yeah. I mean, if they pick you, I mean, you might get lucky. I mean, we probably do a couple of week or a couple of month, I'd say. Probably we usually get like 2 or 3 a week, I'd say. Cool. But let's see, I think that's about it. So if you guys have any questions, I'm gonna hop off now, and you can give me a call. We can talk about it. But until next time, hope you guys learned a lot, got a lot out of this presentation, and hopefully we'll see you soon.